Hello everyone. So today is CPI news on US dollar, and I was able to catch reasonable peep. So in this video, I want to break down in detail how I was able to mark this analysis. The first thing I did was to go check my forex factory calendar to know what the fundamentals are talking about. Remember, I want to mark for the analysis, so I don't know what the actual was already saying. I was concentrating more on the forecast and the previous. So the forecast was telling me here that we have 0.3%, while the previous is 0.1. This one 0.3, the previous 0.1. The same thing with this last one, 2.6, and the previous 2.4. So if you observe all these figures, it's indicating that the forecast, they are higher. The figures are higher than the previous. That's the figures for the forecast are higher than the figures for the previous. And according to the details we have on the three, is indicating for to us that whenever you see that the actual is greater than the forecast, this is indicating that it's going to be good for the currency. So we already know from these fundamentals now that US dollar is going to gain strength, and depending on the pair you want to trade it on. For example, me, I want to trade it on GBP USD. I already know that US dollar is going to gain strength, and if US dollar is to gain strength, then GBP will lose strength. And since GBP is going to lose strength, GBP is the base currency here. That's is the one on the left hand side for the pair. So whatever is on the left hand side or the base currency, that's what is going to be showing on the chart. So since we've already seen from the fundamental that GBP is going to lose strength, then I'm going to be looking for a sell on this GBP pair during that time of CPI. Now check this out. The first thing I did was to check my 1 hour time frame, and according to my 1 hour time frame, I've already seen that the EMA line here is above all the candles, meaning that I'm currently on a downtrend, and that was why I was able to draw out this trend line here for a downtrend. So I have just follow through. I have a top here. I also have a top here. I touch the trend line here. I think I also have a slight touch here. So these are the 3 points that I used to draw my trend line to indicate that yes, it's going to go on a sell. Then I also look out for the nearest low after the recent high. So since this was the recent high, this one here was the recent high, this is my recent low here. So this was the point I used. So the idea now is to check from this point here down to this point here, is there any zone? Now what are zones? According to what I taught those on my Telegram channel already, zones are area where we are expecting high movement. For example, the support and resistance zone. Support zone just indicates a place where the market touch and bounce off. For example, this point here is a support zone because the market comes down here, touch here, and bounces above. Where this one here is a resistance zone because the market touch here, then goes below. So that's the meaning of the support and resistance. So what I now look out for is from here to this point now, towards my backside, towards the left hand side, is there any place I can call the support or the resistance zone? Yes, there is, and this is it. To see it on a clearer view, you can just change your chart to a line chart, then you'll be able to see it. And I was able to spot it here. Currently the market was able to come down to this level, then go up. So this kind of zone now is called the support zone. So what I now do is to mark my zone around that area. So the way I mark my zone is just to take out the wick. That small line below the candle is called the wick. So now I've marked out my zone, I've drawn it to my far right. So what I'm now expecting is, I'm expecting to see something, a movement around this area. Now what I will now do is I reduce my time frame to 15 minutes, then I look at the market movement around that side. So according to the market movement I was seeing around this side, and I started seeing that the market was finding it difficult to break above this line. So it came here the first time, went down, came here the second time, and I had multiple candles rejecting this zone. Multiple candles were just rejecting this zone. So that was indicating to me that I should be looking out for a sell. But nevertheless, I don't normally trade the spike. On in my YouTube channel here, I've already dropped how I normally trade the spike. I have a different strategy altogether that I used to trade the spike for high impact news, so you can check that out. I can even tag it in this video so that I can easily locate it. But for this kind of strategy, I'm not concentrating on trading the spike. What I'm trading is the actual movement. So what I now do is I'm going to take my sell after the CPI move spike. Now let's go check 1 minute. On the 1 minute time frame, what do I have here? So remember the CPI news was 1:30 p.m. on dot, and this was the candle here. This spike, this green candle that spiked above, this was the CPI candle. So it is at the close of this candle now that I am expecting to take in my sell. Now look at what now happened. The candle closed around this area, and I saw that this was like a first stop. But can I say that this is a confirmation for me to take a sell? Well, imagine I had taken my sell from this area, which was what I did. I took some sell around this area here, and I now put my stop loss to be around 10 pips. I put my stop loss to be around 10 pips. Good. Then it went below and went back up again. Now it's indicating to me like this is a risky setup. Now what I now did is, as soon as it start coming down again, remember when it went down here and it let me bring out my line. Let me use a line instead of this. Now this was my first entry point. This red line here was my first entry point. Now the market went down here, then went back up and started coming down again. This point again, this neckline here was what I used as my second entry point. This was when I even doubled down on my risks around this area here. Let me make my candle brighter so that you can see it clearly. Good. So this neckline here was where I put in my second entry point, and by that time I now reduced my risks to somewhere here. I tightened my stop loss. That's what we call it. I now tightened my stop loss. So this was my final entry point. Then I tightened my stop loss to the recent high, which is still around 10 pips. So what I will now target is a good risk to reward ratio, which can be like 1:3 or 1:2. And in this case, the reason why I was able to target 1:2 was because that was where my trend line is currently located. So I just target that, okay, this market is going to spike down from here and come and hit my trend line. So I was able to enter some positions here, and scalp out my profits around this area. So this was how I was able to make profits on my CPI, on the CPI news for US dollar trading GBP USD. Although I also took some trade on XAU USD, which is gold, but the strategy I use for that is entirely different. So if you want to learn directly from me, just indicate in the comment section. And if you're able to make tangible profit from the CPI too, you can indicate in the comment section what currency did you trade. Was it this kind of strategy you use in your CPI analysis? How did you even trade it? Just give us a little preview on how you did that in the comment section. If you also observe a mistake I did in this strategy, or there is something you feel I can improve on in this strategy, please indicate in the comment section, because I'm going to really appreciate that. For those who would also like to learn directly from me, my number will be in this video comment section, and I'm going to pin it. So just reach out to me directly and learn directly from me with my team. You will be taking the trades that I take,